Hey everybody, Chris Pulver here, and welcome back to another installment of the Pulver Report, where we trade to be profitable, not perfect. In today's segment, I'm combining a timeless lesson with current market conditions, and we're going to dive into the Forex Flash Crashes. Okay, a flash crash. What is it? Why does it happen? When does it happen? And how can we trade them? All that and more on today's Pulver Report. Let's take a little trip down Forex Flash Crash memory lane. August 2011 with the Swiss franc. 2015, January with the Swiss franc. August 2015 with oil and commodities. October 2016 with the Great British Pound. December 2018 with the Aussie and the Yen. And March 2020 with risk-off currencies. All of these are flash crashes. All of these are actually from memory. You want to know why? Because if you trade through a flash crash, you typically don't forget it. Now, in my 13 years of full-time Forex trading, I have been on the losing side and the winning side of these flash crash movements. And in today's video, my goal is to help you do the following. Number one, understand why they happen. Number two, understand how to better prepare for the eventual occurrence. This is not the last time we'll see a flash crash. Number three, strategically survive them and trade through them, whether it's before or after. And four, survive and keep trading, because typically the retail trader is the victim of these flash crashes. They typically don't survive, and you don't want to be that person. But if you've lost on a flash crash, what's important is that you learn from it, and what are you going to do differently next time? So let's first define the flash crash. Let's go into the charts and take a closer look.
So let's dive into the charts and have a closer look at some of these flash crashes. The first one that I traded, and I remember trading, is 2011 with the Swiss National Bank. Massive intervention and kind of price fixing by the Swiss franc. So this is the Euro Swiss that's already been selling off like crazy. We have a high up here near the yearly pivot at 1.32, and from the high of the year to the low of the year, we moved nearly 3,000 pips. And you can see that the direction was straight down. So what did the Swiss franc do? What did the Swiss National Bank do? They decided to jump in and weaken their own currency pair. And you can see this across the board. If I go to 2011 on the Euro Swiss, on the Dollar Swiss, on the other Swiss pairs, you will see what I'm talking about. So this was a massive cleanse where all of the bearish moves were flushed out, right? Everyone that's long got stopped out or forced out. Everyone that's taking profit has hit their profit levels. I mean, if you're short the Euro Swiss and it goes 3,000 pips in your direction, that's a pretty favorable move. So here's Euro Swiss on the weekly chart. Here's Dollar Swiss. Let's look at 2011 on the Dollar Swiss. So back on our chart here, this is 2011. You can see that long wick to the south. That's another massive spike, putting that low in place. And that's a 700 pip move to the downside. So typically what we see with a flash crash is in the direction of the trend. These trends become so strong and so severe that the flash crash is the ultimate kind of top or bottom formation. It is very disruptive to normal market conditions. We're talking 600 pips on this Dollar Swiss, 900 pips on the Euro Swiss. We've looked at some. I'll show you some of the Brexit ones from post-Brexit in 2016. 1,000 to 2,000 pips. In 2020, the COVID crash, we had some risk-off plays that were 2,000 to 3,000 pips of volatility. I mean, getting stuck on the wrong side of a flash crash can be detrimental to your emotions. It can be detrimental to your account. I mean, traders can lose a ton of money if you're on the wrong side of it. Now, good equity management, small trade sizes. Can you stomach a trade like this going against us? Maybe, yes. But this is why. This is exactly why I talk about trading on the right-hand side of the trend line. This is exactly why I wait for alignments on higher time frames before I start scaling in. All right, so case in point would be this. If I waited for this, this is the Dollar Swiss. If I waited for this trend line to break, if I waited for this trend line to break, guess what? I may not have gotten the best entry, but once this low was in, I can certainly buy the Dollar Swiss with confirmation on the right-hand side of the trend line and not be stuck owning, buying, and watching this thing go against me for hundreds and hundreds, if not thousands of pips. So right side of the trend line is a big lesson here. So we have our 2011 Swiss franc intervention. I'll go back to the Euro Swiss. This was the one heard around the world right here. So 2015, this was in January. You can see this massive candle. And just a little backstory on this one. What was happening before you see that massive spike? What was happening here? 1.20. So this is post intervention 2011. The market stalls and holds right around 1.20. Now the Swiss National Bank was reassuring that that's going to be the exchange rate. They wanted to keep the Euro Swiss at the least. The lowest exchange rate would be 1.20. And you can see that because of that confidence, the market rallied really nicely all the way back to 126. So we go from 120 hold all the way to 126, and then we started to come all the way back down to 120. I'll do one more example here with the pound crosses. Okay, Brexit 2016. Brexit was voted on in June. All right, we had the June 2016 Brexit move that started to weaken the pound dramatically. You're going to see that right here. This is Brexit, okay? The Scottish referendum, Brexit was right here back in June 2016, and the flash crash move was here in October. So this was get ready for Brexit, wild volatility. This was the market putting in some lows, putting in some lows, putting in some lows. This support I thought would hold. This support I thought would hold. It went several thousand pips to the downside. This was the one trade. Of all the flash crashes, I was fortunate to be profitable in 2011, profitable in 2015, profitable in 2018 and 2019 and 2020. This one I got stuck on the wrong side of, and I can tell you it is very painful. Now, I will measure this move. I was on my way trying to claw to this pound Aussie. I was in this trade in particular, and I was long on pound Aussie. I will say my trade size was too big. I know that it was, and so I had to sit on a drawdown, and this trade went against me thousands of pips. So I was upside down for my net position, probably around 800 or 900 pips of the 2,000 pips that it moved, right? Now, could I stomach that trade? Yes, but it was a severe drawdown. And what I ended up doing was I ended up taking losses. Once price came back up here and became a manageable loss for me, I closed out for a loss, okay? And then I worked my way back through a double bottom, and I ended up being profitable a few months later, got all my money back and then some, and then it took, months of trading to get back ahead. But it could have been way worse. This could have gone another 500 to 1,000 pips against me, and maybe I didn't survive it. Maybe it would have taken the worst possible loss. So, 2015 opened my eyes. 2016 certainly opened my eyes. This is what reinforces trading confirmation and reinforces trading on the right-hand side of the trend line and keeping the trade sizes really, really small. So, more examples. We got the Brexit one in 2016. We have everything with the yen crosses and commodities. Let's look at Euro New Zealand in 2020. 2020 right here. This was a wild risk-off move. This was Euro New Zealand going bananas. That trade right there is 3,200 pips. Now remember, what I show you in the direction. Euro Swiss was going down. Down was the direction of the flash crash. Pounds was going down. That was the direction of the flash crash. Euro New Zealand going up. This is the direction of the trend. That is the direction of the flash crash. Okay? So the lesson here is every time we see these flash crashes, it's in the direction of the trend. And it's the cleanse that has been creating these massive tops and bottoms. All right. So yes, we like to see normal tops and bottoms and highs and lows and see liquid conditions. But in the event that it becomes super, super extreme and it flashes out and flushes out, everyone that's holding short Euro New Zealand is getting crushed out of this trade. Everyone that's long Euro New Zealand is taking profit because it is far beyond the scope of where, it's above this resistance. It's an open space, and it's crazy generosity to those that are on the right side of the move, and it's painful and traumatizing and a super emotional roller coaster for those that are on the wrong side of it. So all I'm saying is it's been a long time. It's been almost a year and a half since we've had a flash crash. Coming into holidays, some odd correlations. I think that we are due for one coming up. And so I'll talk about that more. Keep following along.
So now that we understand what the flash crash looks like, how can we better prepare for these moves and actually find ourselves on the winning side of them? In a previous video that I posted on this YouTube channel, I walk you through all these different price styles. One of them is called the line break. And I can say that with 99% certainty, if you follow the directional bias of this line break and you see a strong trend eventually leading to a flash crash high or low, again, provided you're trading in the direction of the bullish or bearish lines, price should be flash crashing in your favor. And this is why I encourage traders to trade with the strongest trends and take advantage of these seasonal trending patterns. Also, use trailing stop losses instead of just closing trades for profits. right? Imagine a flash crash that moved hundreds of pips higher or lower, and all you have is a trailing stop loss that protects a lot of those profits. Now, to kick off this video, I rattled off 6 flash crashes since 2011, and the longer I've been trading, every now and again, the market just has these savage moves, and flash crashes are like an unfair cleansing ritual, okay? All of these flash crash moves are in the direction of a strong trending move. So imagine that a bullish trend is stretching long enough that traders start acting like this trend has to stop. It can't possibly go any higher. And guess what? It doesn't have to stop, and it can go higher. And typically the flash crash is born. All right? True story. I was teaching at a live conference in January 2015 during the Swiss franc flash crash. Now, I was running trading rooms. We were positioned on dollar Swiss and pound Swiss. We were short, and overnight, we had a ton of profit with this flash crash. Now, we also had a trader that was at that conference live, and he came back the next morning profiting over $20,000 in one night. Now, I was also fortunate with myself and my traders to be on the correct side of this massive price move. In fact, this was like a teleportation on the Swiss franc. Now, we followed the strategy. Our take profit levels were actually slipped by the broker in our favor, which never happens, right? It's unbelievable. But I took those profits all the way to the bank, and so should you. But it's not about my results. Now, I'm happy, of course, and so are traders, but there was a daunting reality that clouded this win because I knew that this move was so unpredictable, so violent, and so unexpected that the losing side, the losing traders were so extreme that this was a problem. So even as excited as it was to see traders rejoicing with profits, it was heartbreaking to see that the Forex business was literally scrambling for a lifeline. Brokers were sticking it to their account holders, right? Like asking the account holders to pay more than their account balance because the move was so violent and so crazy that it pushed them into negative dollar territory. So to illustrate what this looks like, let's talk about an example. Imagine that you want to buy a stock at $10, all right? And your stop loss is, look, I'll buy the stock at $10. If it goes to zero, I'm out of the trade. But instead, let's say that price actually falls to negative $100. And your broker says,
you now owe us $110 worth of losses.
Right? It's pretty crazy. And this is what happened in Forex in 2015. Everyone thought that the Swiss National Bank was going to defend the 1.20 exchange rate, like I walked through in the charts. And what happened instead is this literally flashed 2,000 plus pips in milliseconds. No orders were filled, no liquidity was available. Brokers went broke and belly up. They needed bailouts. It literally changed the FX market overnight. And I can't say it was for the better, right? But what I can say is if you want to continue trading, you need to learn from these crazy outliers because there are massive winners and there are massive losers. And is this going to be the last time we see a flash crash? No way. There's going to be more. Now, do we know how far the flash crash will move? No. On the low end, I've seen them as little as 100 to 300 pips. And that's not nothing. That's a pretty decent move. On the medium side, let's say 500 to 1,000 pips. On the high side, I've seen 2,000 to 3,000 pip moves. Now, I'm talking in Forex, this is just the majors and crosses. So the Aussie, the CAD, the Swiss, the Euro, the Pound, the Yen, the New Zealand dollar, and the US dollar. I'm not talking about exotics. I've seen the Russian ruble, the Turkish lira, the South African rand. I've seen flash crashes of 10 to 20,000 pips on exotic pairs. It's always in the direction of the trend. That's the biggest takeaway from this flash crash, right? So I hope this video is serving as a heads up that we have not seen the last flash crash. In fact, they almost become like this weird annual tradition. Like since 2015, we've had so many kind of annual flash crashes that I have a suspicion right now that it's been about 16 months since we've seen one. And I think we're due for one. Now, with the stock market rallying, clinging to all-time highs, stock strength, dollar strength, commodity strength, sector strength, precious metals, and inflation plays, we are seeing some really odd alignments, even some broken correlations. And that's what sticks out, okay? The dollar basket right now sticks out. We have yet to see a dollar catalyst flash crash, right? Since 2011, you notice I didn't mention the dollar, but the US dollar recently has been on a 5-week bull run, and we're heading into the holiday season. It is a prime candidate to continue that run until it kind of flashes up or flashes down, and then there's a cleansing and we'll start forming those tops and bottoms. If we don't see the trajectory or the pace of the US dollar chillax and take a little breather, this is my primary suspect for the next potential flash crash. If you're following dollar strength, you're probably in great shape, right? If you're looking for the dollar to top, you might be waiting a little bit longer. Now, candidate number 2 or suspect number 2 is the Canadian dollar or the CAD basket. This is a commodity-based pair that correlates with U.S. oil. Now, since the COVID crash into negative territory in 2020, oil has been on a relentless comeback. OPEC is not flooding the market with supply, and prices are higher. And if price remains resilient and there's another grind higher, let's say like $85, $90, maybe even $100, I could see those levels being so overbought and so extreme that becomes a little toppy. But we might flash up to those levels, and if that's the case, we'll probably see some CAD strength and maybe even a flash crash on CAD crosses. And potential suspect number 3 is the Japanese yen and the Swiss franc. And the reason I'm putting them together is because they are the tried and true risk-off currencies in Forex trading. Now, the Swiss National Bank is added again. They are saying that they're on high alert with the strength of the Swiss franc, and they're willing to intervene just like they did back in 2011. The last time this has happened, 2011, 2015, these are flash crash type events, all right? Now, we have a central bank that is on record of intervention, right? They say that intervention is a possibility, but the timing of this is never certain. You know, I'm not resting easy thinking like, oh, the Swiss National Bank's got my back. We have seen a recent slide on the Euro Swiss from 109.50 all the way down to 104 and change. Now, parity, 1.00, is not that far away. And in the event of a flash crash, I could see price dropping rapidly to 1.00, cleansing those long positions, and then it's nothing but buyers on the way back up. So that's potential suspect as well on the Swiss basket. And again, why do I think a flash crash is likely? It's been some time. We've had 16 plus months of pretty steady trading. Correlations right now are broken and unsynchronized. This is a difficult environment to plan around. Central banks are raising rates, like the RBNZ. They're talking about raising rates, or they're talking about actually intervening with price exchanges. So for me and for you, I am trading with eyes wide open, head on a swivel, and it's going to be a really interesting 1 to 2 months as we wrap up the 2021 trading year. Now, I highly recommend that you join me for my live Pulver Report sessions, and let's navigate the markets together. All right. In fact, I'm looking forward to it because that is a great way to get connected. And on a quick and timely note, I'm posting this video right now. This is a timeless video on flash crashes, but I'm posting this video during the Thanksgiving week, and there's going to be a holiday trading period for the next probably 40 days or so. And historically, we tend to see limited volume, limited broker hours, but the markets don't necessarily close. Forex remains open 24 hours a day, 5.5 days a week. And right now in holiday trading, it's about path of least resistance and ride those winners, manage those trades accordingly, use trailing stop losses. Another thing that I recommend you do is you go into your charts and you review these flash crashes. Now, they might be extremes. They might be these outlier type events, but they're really important lessons on trading and surviving them, all right? If you can survive a flash crash, you can trade anything. And that's all about equity management. That's all about preparation. It's all about following the trend. So that will do it for today's segment. And as a little holiday treat, now timeless lessons on flash crashes, great. Like the video for that. Now, as a special trading room promotion, I'm giving you a chance to join my Flex trading room and my Equities on Demand trading room, not for the full price of $299 a month, but for $27. Now, if you're willing to try it out, allow me to help you establish a routine, establish a process. And guess what? I say this all the time. Process equals profits. And what we do in the trading room works. If I can help show you the ropes, if I can improve your trading, I'm all for it. And if you'd like to trade with me, all you have to do is go to the website, pulverreport.com, and visit the trading room tab. In addition to that, I will also post the Pulver Report link in the description for today's video as you smash that thumbs up button, hint, hint, and like today's video, all right? You can also leave a comment, trade with Chris. Put that in the comment section, and I'll reply with direct links to my trading rooms so you can see more. So have a great rest of the day wherever you are. Continue to ask questions, post comments, like this video, and help the channel, please. And I'll see you in the live markets. All right, until next time, this is Chris Pulver. Happy trading and lots of profits.